Money Morning Live. We are here with the one and only Tom Gentile. Hopefully you guys are getting in on Mark's offer. As Ryan stated, less than 3 hours left. Get on in. But right now, Tom and I, we're going to be talking about the cryptocurrency market over the next half hour. Let's bring in Tom in 5, 4, 3, 2.
Hey everybody, Tom Gentile. Welcome to Power Profit Trades, cryptocurrency patterns happening here on Wednesdays. I want to dive into the microcurrency market. I want to talk about how we pick our cryptos. And according to our 2022 closed positions, Eric, we're up double digits this year. So
I love hearing it.
We're doing good on our closed positions. We got open positions we're looking at that are looking, we're starting to see and I'll show you everybody in the next half hour what I really like about what's coming up. Not only what we got currently ready for profits, but many, many more setups that we think are happening with this consolidation that's going on right now. Eric, how's it going so far today?
Things are going well today. New schedules in full effect. Everyone seems to be liking it. The day's going smooth. It's going well. We're finally getting a drizzle of rain here in New York. It's literally been weeks. Everything is dead. But a little bit of rain came.
I had sun showers before we began, so I hear you, buddy, loud and clear. Listen, I want to get into cryptocurrencies, but you know what? I can't sit here without taking a look at Bed Bath & Beyond like everybody else is doing and kind of give you my take on it. I got the chart. I'm looking at the real-time chart for today on the screen right now, and you can kind of see what's happened with this thing. There we go. There's your beginning of the day. We popped up as high as 30, back down to 24, back up to 28. It looks to me like what's going on today is we're getting this series of lower highs, and they're testing that low down here just below 24. I really, my thoughts on this is short-term up and longer-term down. Give you an idea. Ryan Cohen, who's the guy who really started the whole meme concept, the founder of Chewy's. Go figure. It wasn't some. Maybe some of you out there that follow meme stocks said, no, it was Roaring Kitty. It was Roaring Kitty. Okay, yeah, he was a nobody that did really well. But what ended up happening for him, other than making a lot of money, his fame pretty much it topped out with the congressional hearing. Ryan Cohen, who was the founder of Chewy, put a lot of money into call options in GME. And when it started rolling, he basically saved the company. Look what he got. He got a board seat on GME. Well, guess what? He's back buying Bed Bath & Beyond right now. Thinks he's got this idea that he wants to help them out and try to help turn that company around. Because when you look at their balance sheet, it's terrible. Nothing new to report there. But this guy, Cohen's buying strikes at 50, 60, 70, even the 80 strikes that he's buying. So will lightning strike again? Well, here's what I actually think. I think that we will see a lot of meme traders. We're already seeing Citadel coming in and buying on this as well. So I think this time the hedge fund managers want to reverse. They want revenge. They want to get in and buy it and push it up and turn it over to the meme traders and then start selling it at higher levels, right? So what do I like about this? Well, I said short-term up and longer-term down. The pattern that I'm expecting to see is wherever we end up running to the close, they're going to bump it up in the aftermarket and pre-market like they've been doing. I think that's going to continue. And then somewhere, if we actually get up to 50, and it gets enough notoriety. Remember, right now, this volatility is just kind of beginning. We get enough notoriety, then I think then all the folks, not the Reddit crowd so much, but the mainstream crowd, they'll start hearing about this more and more on national television, on mainstream television. You got to go beyond the CNBCs. You got to go beyond the Bloombergs. You got to start seeing Bed Bath & Beyond on what I like to call the 2, 5, and 11. The 2, 5, and 11 are the local channels in your neighborhood. When you hear local news starting to talk about this, like they did with GameStop, like they did with AMC, that's when the highs will be over. All right, so we'll soon see what happens there. That's my take. Yeah, and one last thing I'm going to mention too. Check this out. Look at the This was just a quick print of the call and put options. These are the ones that expire in just 2 days. And we're talking about looking, if you look at the straddle, for instance, their expectations are that we're going to see a 40% range just between now and Friday, right? And I think that might even be low. But again, we'll see what ends up happening on this. But this is kind of what I've been seeing, happening as of now. 40% ranges right now that are happening with this particular company. So let's move into the crypto space. So let's talk about headlines first. Eric, bring up some headlines, please.
Yes, sir. We have this one here on Coinbase. Will briefly pause Ethereum and ERC20 token deposits and withdrawals during the Ethereum merge. The crypto exchange also warned users against scammers offering ETH2 tokens, saying users did not need to take additional action to receive the staked Ethereum prior to the merge. So watch out for those scammers. But also, Tom, do you think this is a good thing that things are kind of put on pause here?
I do. I think that they want to get this done right, and it's taking a little bit longer. And speaking of scams, here's where you have to worry about this stuff. Worry about the scams in really 3 different areas, all right? First, social media. For some reason, people that attach themselves to even YouTube channels. I'm streaming live right now, and so hello to all the YouTubers out there. Keep in mind, it's those comment sections that you got to worry about. You got to worry about those comment sections where, now what's going to happen is they're going to stop talking about, so-and-so did so well for me, converting me from 0.8 Bitcoin to 4 Bitcoin. You can find them and they're always at WhatsApp. They're always at Telegram. They're always at the areas where, for some reason, if these guys are such great money managers, how come they don't have a real phone number, Eric? How come you can only get a hold of them through WhatsApp and through Telegram?
True. That's totally true.
And more importantly, you can never get one on the phone. It's always text messaging. The guys are always too busy, as your money manager, so to speak, to get on the phone and have a conversation with you. I don't know what I hate worse, them or people who actually believe them, believe these guys are actually real money managers. Anyway, beware of the social media troll that trolls some of these bigger channels, all right? Number 1. Number 2, watch out in your email, okay? Because you're going to end up getting emails I get them from PayPal now. PayPal's, telling me that for one reason something went wrong. Amazon, something went wrong. That my different accounts, Coinbase, PayPal, Amazon, they're all closing. Apparently, all my accounts are closing, Eric, and they want me to call a specific number to reactivate the account. Okay, folks, these companies never do that. All right. One great way to figure out whether it's a scam is if you're on your iPhone and you're looking at an email message, hit the from. All right, there's a link there where it shows who it's coming from. You can hit that, or you can hit the to link that came to you. See if you're the only one in that link, or if there's 20 others or 30 others in there. If that's the case, delete. All right, find out who it came from. If it didn't come from PayPal, if it didn't come from Amazon, and you'll know because they'll have some real long reply message. Delete, okay? And don't click on anything that says click here to fix your account, all right? You don't want to do that either, all right? If you're concerned or confused at all, call the actual company. And that way, that if it's right, then you got a hold of a real person. Don't use the phone number that came in the email. Go find the phone numbers to PayPal, to Amazon, etc. All right. I think I've touched on that one a little too long. And never give your private keys to anyone, guys. That's the golden rule. What's next?
Oh, I want to say one more thing, Tom, about the YouTube stuff, because I'm also on YouTube. A lot of times people will impersonate the owner of the channel. So maybe Tom Gentile will be in the chat offering his followers. And we know that you're not in the chat giving people stuff.
You have no idea how many times I see myself replying to myself, and it's not me.
Yeah,
and and my guys go through and try to delete that crap as much as possible, but every once in a while somebody comes through, and it's funny because all these and these testimonials, as you call them, are always from people who have 2 first names, Greg Paul. I was always told, Eric, in the when I was young, never trust a guy with 2 first names.
As I'm learning.
I haven't. Let me mention the other thing too: text messages as well. there's text messages coming in that I get them too. That's an easy one to check and see if it's real, because it comes in from some email address. They're not coming from an actual phone number. They're coming from an email address. And they're always, it's you and 19 others that are attached to the email. So be careful. Just delete that crap and report it.
Yep, I agree. Well, let's go on here to the next article. It's about Bitcoin. Bitcoin traders anticipate new yearly lows after Bitcoin's $25,000 rejection, but data disagrees. Should traders expect further downside after Bitcoin's failed to hold above 25K? I want to know what your scanners are saying, what your thoughts are here, Tom, about Bitcoin.
Well, let's talk about this for a little bit, because this is really the show here is Bitcoin, Ethereum, cryptocurrency. And I want to talk a little bit about this, and I can show you several different charts on this, but let's start with the shortest term chart and kind of work our way out as I write some numbers down, because I'm constantly, I've got my eyes on more than one screen, but there we go. So this is a short-term chart of BTC you see here. Let me blow this up so everybody can see it as best I can. This represents the low that happened on June 18th as we dropped below 18,000. Do you realize if you look at, now I look at two different areas. You've got a closing low, which is here, and then you've got the spike low, which is down at the bottom. I'm more interested in the closing low. That closing low coincided with the opening, the following day opening. So right there around 19,000, it was 18,954 to be exact. That was the low. Notice what happened. You had a triple bottom that occurred between the middle of June and the middle of July. So about 2 weeks, low, 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 and then we got liftoff. And we got above this area, this 21.7 area, which we ran up to back at the end of June and ran up to once again around just before mid-July. And then we crushed it at the end of July, went above 22, spiked up to 24. And all of a sudden now, resistance back in June and July became support at the end of July. Ran back up again. We were at 24.5 as we turned the corner into the month of August. We pulled back to the 38% retracement level. That was 22,350. Ran up again, new highs. Now, we spiked, all right? This was the closing high prior. The closing high that we have now occurred 5 days ago. That was at 24,449. We did spike up 2 days ago to 25K. We spiked up to 25K. It didn't hang out there long, retreated from that, and we've literally been, really the last 48 hours, we've gone from 25,000 down to lows just above the 23,000 mark, is what you're seeing on the screen here right now. Okay, so where are we likely to go? Okay, so yeah, Bitcoin's continued to drop. Hey, look where we've come from, folks. We've come from 19,000 closing low. We've come from 17.7, all right, 17.6 spike low, all the way up to 25. That is a huge move for what is notably the biggest crypto out there in terms of market cap. So we should expect some pullbacks. Where are we likely to pull back to? Right now, in the 23,000 area, where we are right now, really good resistance becomes support level. All right, resistance when you're taking yourself all the way back to the 720 highs. Right, once again, that also coincided with some resistance back around was probably about 2 weeks ago, week and a half ago, and that's now becoming some support. If we break that, then the next level I'm looking at is 22,350. The 22,350 level, and here it is right here. Let me blow it up for everybody. You can see that is the 38% retracement level. We could double down on that. All right, we could double down on that. We could go down to as low as the 21,702, or even all the way back to the closing lows, which are 21,053. That is the short-term stuff I'm looking at right now, Eric. So that's the short term for Bitcoin. If we were going to look at the long term, really got to pop. Let's pop a 200-day chart on there, right? 200-day chart is going to bring us back all the way to the highs that we saw earlier this year. Now we could utilize those highs, and you can see utilizing those highs, we're still not even out of the cellar yet. I'm going to come on in here, And you can see we've talked about these areas, this just below 30,000 mark, which is a Fibonacci retracement off that last move down. Then I've got 33,199, 36,561. We're nowhere near any of that. But if you look here, what we've been doing is we've had a pattern of higher lows and higher highs all the way through. Okay, so that's Bitcoin. Let's take a look at Ethereum. Okay, so Ethereum, ETH, let's see what Ethereum has to say about this. This is the short term of Ethereum. Okay, so Ethereum short term lows were back also on June 18th as it came down below 900. Right now, if you want to see the tail wagging the dog, look at Ethereum, because Bitcoin has not doubled in value off of its low. If you remember, its low, and I got to take us back to that short-term chart so we can do some comparisons. The low on Bitcoin was, well, we'll call it 18,000, right? So what's 18 times 2? 36. We got nowhere near 36, right? We made maybe a 50% jump from 18 to that 25 level. Okay, so there's we haven't moved anywhere near half the range with Bitcoin. Look at Ethereum once again. Ethereum 900, 1984. We clipped 2,000 about 3 or 4 days ago. 3 days ago we clipped the 2,000 mark. And since then, we've been getting the pullback like we have with Bitcoin. Now, we still have a little ways to go to get to what I like to call double line support. Right? Double line support is right here around the 17,250 level. That was based on the resistance that came in, again, back at the end of July. We had resistance that came in right here. I'm going to call it right around that 17,250. You can see it here. And then once again, when we had that surge up and that little bit of a pullback for a couple of days, and there was some more resistance building in this area. Again, this is the area I'm looking at is 1,725, right? So 1725. We've ran up to that high. We've pulled back. So there's your first level of support if we continue to drop down. Now, what's interesting about Ethereum is going to be the tail that's going to wag the dog for a little while, because of what's going on with ETH2. And so if we do happen to come down and break this could be, by the way, Eric, this could be our next buy the rumor, sell the news.
Okay.
So if and when, and we'll just really call it when, Ethereum does finally jump to the its new technology, that could be a sell the news event, folks. And if it is, we could see some pullback that could take us back down to the 1,600 mark. All right, 1606, 1439, 1372. I would say that based on the pattern we're having right now, I feel real comfortable with Ethereum staying at the 1606 level. And as long as it stays above the 1606 level, we still have that upward pattern intact. That's the short term for Ethereum. Again, what does the long-term chart have to say? Well, again, we're going to look at that 200-day chart. Let's take a look at it. And you'll see here, the 200-day chart shows the highs on Ethereum. This was back in March, or really back at the beginning of April, end of March, beginning of April. You can see that high at 35.22, and then that low that dropped us all the way down to 994 and even below 900 at one point during the day on the 18th of June. Triple bottom, just like Bitcoin had. The rise that's out. Okay, here's another very interesting point. Look at the high. Look at that Fibonacci high. This is a 38% retracement from top to bottom. So we came in and slammed into some resistance right here, just above 1960. If we can get above this 1960 level, then I got 2258 on the screen as the next area of resistance. 2556 would take us out of the bear zone for this year and put us back into a bullish camp. Now, the way Ethereum reacted off those lows makes it the stronger of the two coins. And so it's almost like I'm looking at, I don't know about you, Eric, but I'm looking at Ethereum first and Bitcoin second.
I do like Ethereum. I get a little bit worried with the whole conversion of the coin and what's going to happen at that point in time, but we are a bit away from that right now. But I do agree. You're seeing more movement, even on a daily basis, in Ethereum versus Bitcoin.
We really are. And so, looking at Bitcoin and looking at Ethereum and the way that we look at these coins, I want to talk to our group here for a few minutes about exactly how we pick our coins in Microcurrency Trader, because we're traders no less. We have targets when we buy a coin. All right, we're not in this to buy and hold forever. This is not what we do. I have coins I hold. I mean, Bitcoin and Ethereum are two of them. But I also trade coins. And so when we're looking at trading coins, we're looking at, again, there are got to be reasons. We don't pick coins and throw darts at a wall. Okay. I mentioned this on Monday, what we don't do. We're not meme traders. We're not buying and holding Doge for it to go to $1 or $10 or whatever the meme traders are thinking about that particular coin. All right. We own Doge, but we have out prices well before those areas, right? But we don't own it. We're trading it, right? I don't like to say when it comes to Microcurrency Trader or microcurrencies, all right, the smaller coins, I don't own any of them, okay? I'm renting them. I'm really in them short term. It's a short term lease. If I can get in it and out of it in a day, great. But that's not going to happen. That's typically the not the rule. Okay. The rule is that what we're looking to do is get in, and we're looking for that average hold time, maybe be anywhere from a month to a few months, and often sometimes less. So when we look at our coin picks, there's got to be a reason. There's got to be a way to pick them. All right. So let me show you how we pick these. So what we do is we have a three-pronged approach to how we pick these coins, Eric. So I look at Fibonacci levels first. That's what I'm sharing with everybody. I'm sharing Fibonacci levels with the big group. We do that today. And so what I like to see in a coin that I'm buying is I look for a trend low, and then I look for a trend high. And then I like to see that pullback that gets us into what I like to call the next buy range, that retracement range. So we've had some nice runs with Bitcoin. We've had some nice runs with Ethereum. We've also had some nice runs with a lot of smaller altcoins. We've gotten out of a few altcoins at our targets, and some of them could be setting up for even more upside momentum. This is one of the things we look for. We look for that pullback. That's the first thing. The next thing we'll look for is something I like to call currency waves. So currency waves are a way of looking at what short-term currency movement is and what long-term currency movement is. And so these can be related in things like moving average crossovers and even MACD. All right, you can set a MACD trend to create a moving average crossover, and gives you a really good depth as to how, when that crossover happens, how deep did it move to the upside or how deep did it move to the downside. So when a short-term currency crosses above a long-term currency, that is again a bullish trending opportunity. So the interesting thing that we've learned about microcurrencies is that each of them have their own footprint, their own fingerprint, if you will, of how they like to move. And so when we're looking at currency waves, one coin might have a different optimal currency wave than another coin. So that's what we look at, Eric, when it comes to currency waves. And and then our third thing we do, and the thing is that we don't look at these individually, guys. We look at them as a group. Okay, so when I'm layering in for number 3, I look for something that we like to call channel collisions. Now, Fibonacci, anybody can do it. All right, anyone with some decent software can snap Fibonacci lines. Currency waves, anybody can do that too. All right, although it's going to be a little tougher to be able to optimize the currency, the right currency wave with the right cryptocurrency. But this that you see right now, something we like to call triple stack compression. Triple stack compression is a way that we look at channels. We look at long-term channels, medium-term channels, and short-term channels. And what we're looking for is the market to collide in 2 or more of those channels. All right, we call it multiple collision. If all 3 of them happen, we get what's called a triple stack compression. And we like to call our channels the 3 Ps, Eric. So the long-term channel we refer to as the precipitation channel, okay? Because precipitation tends to run, it's a slower move to the upside or downside. It's a longer-term trend. Parallel channel means that typically parallel channels is something that goes sideways, all right, where we're getting a pause in that precipitation. And the propulsion channel is a short-term quick move. When we see precipitation, parallel, and propulsion all hitting in the same area, that's what we call a triple stack compression. The market compresses in that area, and it leads to, in more cases than not, a new move to the upside. Now, the interesting thing about triple stack compression that I want to talk about with everybody is this is not a tool for the bear market. It is a tool for bull markets only. In long term, we've done very, very well with this. We have a version that we look at this in the stock market. And so we've basically taken that and tweaked it a bit here for cryptocurrencies. So, once again, it comes from something we call our darknet channels. It's similar to Elliott Wave. So any of you that have heard of Elliott Wave, it's fairly confusing. And I mean, the wave count, when you understand the wave counts, that there are what's called impulse wave and corrective waves. You have 3 impulse waves to the upside, 2 corrective waves to the downside. And after the impulse wave done, then you get what's called an ABC correction off of an impulse move. And that you can have longer term and shorter term and micro waves. And that's where it starts to get confusing. Also, what's confusing is sometimes the wave count can change. Any of you that have ever looked at Elliott waves and you see a change in the wave count, it's almost like you get a false signal, right? We don't get false signals when it comes to our triple stacks through darknet. Those are steadfast signals, win, lose, or draw. And like I mentioned again, it's only a buying strategy. So we have found contrarian bullish signals are much, much better than bearish signals. So what you see here, the computer sees like this. It just gives us simple buy and sell signals. So I mentioned that because I wanted to talk a little bit about how we get these picks, how we're getting double-digit returns on our closed positions this year, while the overall crypto market is still down considerably since the beginning of the year. So if for those of you that are part of our microcurrency membership, we're going to go through, I've got the latest watch list. We're going to go through the latest watch list and update that from just a few weeks ago. So I've got that as well. We'll also see if we're going to go through things like our Fibonacci. We're going to look at currency waves. We're going to look at triple stack to see if there are any new buying opportunities that are stacking up. If you want to be part of microcurrency member, or want to be one of our microcurrency members, check out phone number on the screen, links below, above, and beside me. All right, guys. So I'll see all of you in the room in a half an hour, and everybody else, we'll see you back here again Monday, same time, same place, and I'll talk to you then. Bye, everyone.